Hello everyone, welcome to the channel. Today's market was completely random. Why do I say it is completely random is market opened gap down. Okay. Market went up, immediately came down. Went up, immediately came down. Went up, immediately came down. Went up again, immediately came down. Went up again, immediately came down. See, markets like this, right, will make you test your patience and also will make you lose your capital if you are sitting in the wrong side of the trade. Many people, what they will think is like this line, meaning this previous day's high, is acting as a resistance, and many times market comes there, we will short, comes there, we will short. That's what people would have thought of. But from SMC concepts, what we generally do is we identify the structure. What does structure say? Market went up, came down, okay, and broke the structure. And if market comes back to a demand, that is when we enter into the trade, right? So where is the demand sitting here? The candle which brought the closure for you is this particular candle, and you need to wait in the market till 1 o'clock. 1 o'clock you can take a long position once the market retraces back to your demand out here, and keep the stop loss below this and target 100 points. Always target 100 points. Entry is 354 and target should be somewhere around 454. That is how you should close your trade. If you know SMC concepts, if you learned SMC concepts the way I teach, then you could have easily captured this trade. But the problem is many people will become restless in the market. They will see that the market is moving like this, they will enter call here and market will reverse, and they will enter put here, market will go up, market, and they will think like my original call position was only right, and they would have entered closed put here and entered call again, and they will be confused as to what is happening. Range bound market like this will make you lose your capital faster than any other trending market. If the market went up like this continuously, meaning like this, it pulled back, went up like this is what we discussed. The moment it breaks this particular supply which we have, then we can plan a long position. But market did not break it, neither did market come to a demand and react from that and went. Market did not react to whatever plan we discussed. When market does not do anything as per our plan, we need to stay out of the market, and we need to stay disciplined in the market as to saving your capital. Because many people, what they will do is they will try to trade every single day, and one fine day they will end up over trading, and the moment big moves happen, they will not have capital to enter into the big moves, and they would think like, if I had not traded in that day, this day, then I would have had this much money, I would have made this much profit today. Remember, discipline and risk management will make you stay in this game longer than you expect. Trade small or lose it all. I'm saying this, write it in a particular sticky note and stick to your laptop, or even write it in this particular screen in your trading view, and make sure you read it. Trade small or lose it all. This is going to happen very very soon. Okay, that is the reason I'm keeping on emphasizing, keep your lot sizes small, or keep your risk management according to the risk which you can bear. If you can bear losing 1 lakh a day and you can sleep peacefully, then it's up to you. You can trade in such a way that you can manage your losses. If you are trading in such a way that you are happy with 20k profit and sleeping peacefully, trade in such a way. Always define how much ever you can lose and bring only that money into your demat account. If you cannot lose more than 10k to 20k in a day, don't put more than 10 to 20k in your demat account. That is the maximum thing. You have to make sure that before even you enter your trade, you need to say like, this is my A plus trade, I'm going to make profit if my target hits, I'm going to exit this trade if my stop loss hits. That is how you should say to yourself before even entering into any trade. Process only will make sure that you are sustaining in this market. Okay, so what we see from the market for tomorrow is this, we call it as a range liquidity, meaning market created a more like a box. Okay, this box is something market might travel tomorrow also in the same box, meaning market can do all such kind of a drama like this. It'll make sure that you think that it is going to go down and it'll come up, it'll make you go down like this. It can do drama inside this. So what I would advise is, mark the upper range something around 23,460 and mark the lower range something around 23,300. Between these two ranges, make sure you don't trade. And whenever range liquidity is formed, what retail traders generally do is, they will think that, okay, this particular market has broken this range, and the moment it retests this thing, this high, this was earlier your resistance, now this will become your support, let's enter call. That is what retail traders will do. But what market will do is, market will hunt the liquidity and then it will go down. This is what market will do. See, liquidity comes only when there is a lot of relative equal highs in the market. These 1, 2, 3, and also this tap, all these 3 to 4 taps into this particular line is nothing but liquidity which is created in the market. What does liquidity mean? Whenever market came here, sellers stepped in. Again market came here, sellers stepped in. Again market came here, sellers stepped in. So what will sellers do? Sellers will think like, I don't want the market to go above this range, so I will put a stop loss above this particular place. So what is the stop loss? Stop loss is nothing but, if I am selling a particular contract, I am promising the market that once the market comes back to my stop loss, I will buy that contract back and I will close my positions. So this will act as your liquidity, meaning market will hunt this stop losses. And the moment this happens, what will a normal retail buyers will do? They will enter a lot of buying orders. So they will put all their stop losses below this particular line, right? If you are entering into a call option, once this range is broken, what will you do? You will think like, okay, I will enter into my call. Once the retest happened, I will put stop loss below my swing point. And what market will do is, this box is marked as a supply zone, right? We will wait for a small reaction like this and then we will take down. This is going to be one of the best to best A plus trades, because there is a untested demand which is sitting somewhere close to 23,220. Okay, this is very likely to be met by the market tomorrow. That is the reason I am saying, like, very highly likely that this liquidity sweep can happen tomorrow. So please make sure that you are keeping your quantity size extremely small. That is one thing. Second thing, what can be done is, once market gives a blast like this and even breaks this particular supply above 23,500, something of that sort, only then I'm interested in taking the market higher, at least till the earlier discussion point which we had, somewhere close to 23,800 also can be reached by the market if the momentum is good, if the volume is good. If both of these are good, pretty sure that this high momentum move can be captured tomorrow. Again, I'm saying liquidity sweep is very important, which can happen tomorrow. So if you don't know about liquidity sweep and if you don't know about how SMC works, all that, I have a dedicated course for you which will make you understand the market concepts right from a beginner all the way to a pro trader. There are like close to 15 to 16 videos which I have encapsulated in a particular course. If you are interested, I will drop a link in the video in the description. You can reach out to me. I will give you the course details. I hope this video is educative. Thank you so much for watching. We'll meet in the next education video.